Now I'm just going to show you how to read my charts. It's pretty simple actually. I'm just going to click on a couple of these just to give you a general idea. So basically right here, see this line right here, it shows where I took my trade. As you can see, it's labeled December 4th, 2012 in the money. So in the money stands for, ITM stands for in the money. So this is pretty much telling you that this is a winning trade. I'm going to have the losing trade segment into a different folder so you won't have to even read anything. So basically right here I took the trade, and then down here this is the expiration. You see this line that goes across here. I just marked it as the expiration point, and these are all in 5-minute charts. So it's a 5-minute trade. I took it on Markets World. They allow you to do 5-minute trades. The reason I took this particular trade is because, as you can see, the MACD is stretched out, hasn't been moving very much in the last couple hours or so, and you can actually see the price correlates to that as being moving very sideways. The price hasn't gone over any of the SMA 200 or the SMA 100. The price tried to touch it earlier on, and then if you look at the EMA 13 is sideways, and all the price movement is pinching basically all the different moving averages almost. So you can tell that if the price goes to the the SMA 100 right here, it should rebound off it. It might go up to the SMA 200, but it's unlikely just because of the previous price action. So you take a put trade right here, and it's a successful trade closing right down there. So you have the market right there showing the entry point, and you have the market right there showing the expiration. The other reason that you can take this trade is because, as you can see, there's a cross line right here, yellow going down, so you can tell it's not strong for the uptrend, and you can tell it's showing like a reversal basically, or at least sideways trend. Show you another one. These are all in the money trades. Alright, yeah, see, so I take this trade right here, 5-minute trade, about 6:15. This since I have the line right here and the expiration price is here, you can tell I didn't take it right at 6:15. I can't take it right at 6:15 anyway because it'd be too late because it's a 5-minute lockout. But so you take the trade here, and then expiration is right here. I took this trade because of its correlation to the SMA 100, and because of the previous price action and the level of support right here. As you can see, price is having a hard time getting under here for a while. Sideways trend. So you take the trade here, or you could take it here. I probably tried to take it here, but I got this price or something like that. You can also see the MACD is somewhat in an upward swing, but it's very sideways, but it's a sideways upward swing, so that's a very positive sign. The stochastic has already touched this 20 line right here and was headed up, but sort of you can just say it was just touching the 20 line because it started heading up after the fact. But yeah, this is a solid trade. It's very high probability. And then the close is right here, winning trade. Next trade, I'll just show you one more. This will just give you a general idea. This is not a very easy trade, but close to it. So you want to look all the way back here. See, let's see. I started at 2 p.m. right here, so it goes from 2 p.m. to about 6:45 on a 5-minute chart. So that's about the range that you want to see. You want to be able to see far out to where you can understand the previous price action up until that point, basically. So price was down here. This is the previous day's close, the yellow line. You should know that, but I'm not sure how long. We're gonna have different people, different levels of traders, beginners and intermediate, advanced, but basically, yeah, this is the previous day's close price. This is also very important line that you have to be aware of, because it's also used as your support and resistance. Sometimes it's stronger than your moving averages, but your moving averages are very important for telling you your level of support and resistance. So you always need to keep those in mind at all times. That's why I use 7 of them, and then I also use the previous day's close. So, and then you also look at the support and resistance of the actual price action itself. That doesn't include the reaction to the different moving averages and previous day's close, such as how the price here went under the previous day's close, and the price is actually going under the previous day's close before it takes an upward move. As you can see, went under, went up, went under, went up, went under, went up. So went under, went under, went up. You have to be careful when the price goes under the previous day's close, because at times it can use the previous day's close as a form of resistance. So if it goes under, it will have a hard time getting back over. It can use the previous day's close as a place to anchor itself to go to the downside again. So you have to be careful about that. You have to make sure you're in a sideways trend when you do stuff like this. But yeah, I didn't take these trades. That's part of the reason. I just used what I have right here to help me to come up to the conclusion I should take this trade. So yeah, the price went here, didn't quite touch the previous day's close until the next bar went up. So as you can see, the strong move after this strong move down, it took a strong move up. So this is a strong move down, so don't be too afraid of the fact that it's a strong move down, because so was this, and you saw the result last time, not even an hour ago. So price goes here, take the trade here, call up, close right here, 5-minute trade, market swell. Now, as you can see, the MACD is going down, so we're in a downtrend, and as you can see, we're still in this downtrend going right into this price right here. So right here, you would be afraid that the price is going to drop under the previous day's close. I forgot what actually happens here because it's a long time ago now, but you get the gist. So take the trade here, call, close right here, well in the money. Now you have to be careful because there's also a signal here, well, a weak one, but it's basically a signal. The price, once it touches this area, is basically a put signal, but it's kind of a weak one. It's like a modification of one. But yeah, you take basically when the price goes here, even actually, it's basically a put signal. Not here, but it went a little higher than I would like for it to be for me to do a put, but technically the price goes here after this move. With the EMA 13 going down like this, you want to look for a put when the MACD is going down, when it's in a strong move. Yep. Then the stochastic was actually pretty sideways, so you can tell that the price isn't going to be under this for the next bar. So the probability for this trade is like 90-something%. It pretty much, you have no chance of losing this trade almost. But yeah, these are the kind of trades you really want to see, but sometimes you have to wait a long time to see these, days even sometimes. Or sometimes they'll happen and then you'll come back to the computer and see that you missed it. But you always want to keep a lookout. That's why I say, keep multiple screens up, get on YouTube or whatever, and just have something to the side where you can see it. And just move around, go to your different stocks, go to your different forex pairs, and make sure you can see what's going on, but don't focus too hard on it because it's extra boring, and you don't want to make too many trades in the absence of perfection, which is what a lot of people do. Most people don't understand perfect trade setups the way I do anyways, but this is pretty much an example of a perfect trade setup. But there are better ones, even more so than this one, but this is around 90% success rate.